As Tortoise Capital, it's April 1st, 2020, so I'm going to go through my usual closing of the market update. So I was just checking out the market, big gap down, one surge up, one leg down, half a leg up, second leg down, backing and filling at the close. Sort it by best to worst. Just do a quick look at what's in the fall. Anything in the summer. Most everything in the spring. Daily winters. Just Walmart. This is weekly summer. It's all the defensive plays. Inverse oil. Weekly springs. It doesn't look like anything. And then monthly spring, probably just treasuries. Yeah. So treasuries, weekly, or I'm sorry, monthly spring, weekly summer, daily fall. Okay. Or no, sorry, that's the inverse Dow. Treasuries were the weekly summer and daily summer. What's that look like? Looks like that. Triple Dow, inverse. Have that little read covered. So it's had this nice run, the pull back to the fair value. How about that? And then big gap up today as the market sold off harshly. Okay, so now I'm going to just go by inverse. Then I sort that. Then I put it in this stack based on highs and lows. And I come find the S&P. That's my little cut and paste there. It goes into the daily report. File, save as. GWin, that's the standard name for that image file. That's hot linked to my PowerPoint for my production of my daily report. Okay. So then I'm going to come to the S&P, and now I'm just going to move everything. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Just, I wasn't sure if I'd done this or not yet. So just slide it over. That's the 10-day look. The 20-day look back is here. 30-day, 30-day look back is there. So in this 30-day look back, that's the high. That's still the high. And the low is still the low on the 30-day. The 10-day high is still here. That's the 10-day high. Now this is today's range. So all of those numbers are still good. Let me adjust all my little stops. This is well off the chart. Yeah, that's still okay. That's still good. These three refer to much longer time frames. That's how long ago those price levels were in place. This one feels important, right? That Z3 excursion was the same as the RL10 excursion and the 10-day low down here. So all those prices are still okay. I'm going to adjust my fair value. That's still the peak of the dragon up in here. This is the peak of the Z3 excursion before it broke out, and the PSAR flip. Let's see. We can get rid of that one. We're going to drop that one down to the Z plus 2. We're going to drop this with the RL90 and the Bollinger Band mean are simpatico right now. This is the 10-day high. This is the price, has come down to here. The 1 day has moved from there all the way to here. So now I got to move the 1 day low down to there. That's the 1 day range, the 10-day range, the 30-day range. My sell-offs of 10, 20, 30, and 40 are still in place. So we're at right 10, 20, 30. It looks like about 33% from the swing high. Our MACD zero line is there. We're still in the spring and enter the Red River. And all of the things being, I'll bring this back down to the Z3. All of the things being equal, that's that. Going to notice this 10-day high is right where the that RL10 flipped as well. So I'm going to call that one file save as market daily. That hot links to my little daily report. File save as market 20200401. That way I keep a running score of the last 15 years of daily market snapshots. So if I ever want to go back and do research, I have all the daily reports saved and the daily market health check, so I can always go find what the signals look like on that given day and what the market felt like, so that I can then practice trading forward from any scenario that I want to recreate from the last 15 years, which is not a bad resource to have. So if you are doing back testing and you found some patterns, you want to check it out and it seems to test out pretty well, then you want to go test it forward. Well, you can then pick the start date that you want where you first got the signal, then just pull up the daily report and the market health check, frame the trade, and then start stepping it forward and feel what it's like to flow through that trade live with the information that was available on that day. And then that gives you a little more sense of what it's like to set it up and trade it and frame it and so forth. So that's a pretty good resource to have. So that's that. So this is another case where now when I go to the S&P, some other things that I'm looking for. Where is the DIA and EFA compared to it? So they're slightly better, but not much to choose from. So this was the whole global market suffered today. There's emerging markets, Brazil. I'm reading up the stack. There's the Aussie dollar. Wheat and precious metals, silver. Walmart finally held up pretty well. Treasuries. U.S. Steel. Alcoa. U.S. Steel, Alcoa, and oil. That's kind of an industrial. So now I'm going to see, where is XLB in this stack? There's energy, tech, but basic industries, and so material. Basic industries were about the same as the S&P, but Caterpillar. Let's see, Home Depot, Caterpillar, Cisco, Devon Energy, Walmart, U.S. Steel, and Alcoa in the green today on a day when the Dow was down 4.5. So somebody was buying the heck out of them. You'll hear me talk about my U.S. Steel trade tonight. So that's sort of that. Now, what's worse than the S&P? Tech, energy, Apple, Chevron. That little swing trade may be done because energy was less than the market and Chevron was worse. There's Mexico, finance, real estate, Russell. It's not unusual to find the Russell like the market, only more so. So the market was down 4.5. This was down almost 7. So it almost gives you 1.5 or double leverage on the S&P usually. Clean energy, Tesla, Virgin Atlantic, are short, and Win's going to be good. Boeing smashed. And then way at the bottom, Simon Property Group down 15%. And you may recall our short position on this one from 56. Yeah, that's going to be, we just know that's going to be good. And then the intraday on that one. I mean, does it get any easier or better than that? It's already on our list of things that suck, if I may say it that way. There's your side. There's a big gap down, sideways quiet channel, and if you just play the Z3 breakout, you're adding another position at 50. Take any exit in here around 46. That's an 8% negative move. Then at this point, the trade is done because you've still got that gap all the way back to the VWAP, and it acts like a VWAP magnet. So don't be surprised when we cover that one tonight too. So Boeing, the big suck, happened at the same time when the market tried its run up, and this is when the market rolled over, right around 11:30 Eastern. So watch what happens at 11:30 Eastern here. Everything up to that, the S&P's going well, and then crash. And when it crashes, the things that crash even more are the things that already suck, like Boeing at 11:30, smash. So when things roll over, I don't necessarily go short that thing that was strong, but have those list of targets that are already weak and where it wouldn't surprise you if they were going to be worse than the market. And then if they are worse than the market, just short them. Win. There it is, 11:30, the big fail. Virgin Galactic, the big fail at 11:30. Tesla, the big fail at 11:30. Mexico, the big fail, 11:30. This is why I like Mexico intraday. Look at that beautiful crash. Look at that beautiful owl, and that tells you when it's time. When the RL270 has rolled over, the 90 rolls. Look at the 10 rolls over, the 30 rolls over, and there's your owl right here with a stop right there. And then the 90 rolls over and gives you confirmation right here. And then the 270 rolls over, gives you confirmation right there. There's nothing left to do but just play it. And it crosses the VWAP. And as far as it moved on the way down, the maximum excursion from the VWAP to the belly of the dragon or the RL10, watch how much further up it gets most of the way. When it crosses, look how high it gets. It is very symmetrical. That's the RLFF strategy right there. Chevron, the big smash at 11:30. Apple. So this is why you got to pay attention to the market. When the market is trying and it collapses, everything else that's connected to it collapses. Euro-Asia blend, they're all in the same boat together, owned by the same people. Diamonds, 11:30, and two beautiful legs down. So that's what I want to say about that. So thanks for your kind attention. Oh, I should say anyway. That's my post-market rapid assessment of what's going on. These are my standard usual suspects that I'm going to find most of my ideas in. I'm checking the Four Seasons, looking at markets and feeling who's the winners and the losers of the day. Meanwhile, my spreadsheets are all updating, to get all the details. To get all the details in for whatnot. And once those finish up, I'll finish printing my daily reports. And again, those key price tables and images, I save in a standard place and are hot linked into PowerPoint so that when I pull up my report, all that stuff is ready for me to look at when I read through it. So as a standard practice, that took 15 minutes, guys, and I'm ready for tomorrow. It's 5:30. I'm going to go out and walk the dogs while the quote's finished loading up, and I'm ready for tomorrow already. Take good care.